let me show you the textbook we shall be using for this control account. You see, this is Frankfurt Business Accounting, 11th edition. The 11th edition, 2008, with the inscription under ASEA International Financial Reporting Standard Edition. This is Frankfurt Business Accounting. So I would enjoin you to go to the market, pick a copy of it, and follow effectively in this topic, control account. And I believe if you do that, you will not find this lecture series that difficult. It will be as easy as any other thing you can think, worth doing that you can think about. So, we shall be looking at control account, and control account is in chapter 31. Chapter 31 of this textbook. Chapter 31 of this textbook. Chapter 31, and we shall be considering some exercises here after we have give some little explanation of the concept. To start with, we say that control account by definition, you can write if you are a fast writer, but I will try as much as possible to carry you along in this lecture. Are you getting me? So I will use redundancy, a kind of repetition, to make you understand what the rule of the game is all about. So we said that control account by definition, control account may be defined because many other authors may define it in their own way, but still saying the same thing. So that control account by definition may be defined as an account prepared to check the correctness of balances in the personal ledger of customers. I come again, you just write and say that control account may be defined as an account prepared to check the correctness of balances in the personal ledger of customers. By personal ledger of customers, I mean the account of debtors and creditors. By personal ledger of customers, I mean the account of debtors and creditors. So I take it again so that you understand what we are saying here. We say that control account is an account prepared to check the correctness of balances in the personal ledger of customers. The customers there are referred to as the debtors and the creditors. Most often, control account has to do with the account of credit transactions, credit sales, and credit purchases. The control account, it is often referred to as total account. It is often referred to as total account. The reason it is often referred to as total account because it shows the total of all the outstanding debtors and creditors that a firm has. I said that the reason it is referred to as total account is that it shows the total of all the outstanding debtors and creditors that a firm has. For example, if you are in business and you own a firm, if you are in business and you own a firm, especially in today's business, people do businesses on credit. That is credit sales, credit purchases. For example, in Nigerian breweries, there, you go there, you see some of their customers, they come, they carry goods on credit. Themselves, they buy on credit, and as they buy, they pay their customers. And as they sell, their customers do what? Pay them after some time when they must have made their work turnover. So now, consider yourself as a business person who sells goods, who makes sales on credit, and also who makes purchases on credit. The control account then will now show you all your debtors and all your creditors. In the control account, you get the total That is the total of all your debtors and the total of all your creditors. That is the creditors, those whom you are owing, and the debtors, those that are owing you. You see, when you have your debtors account, in your debtors account, you see the individual account of your debtors. For the control account, when you prepare the individual account of your debtors, each of them, you now begin to transfer them to the control account. In the control account, you will not see the individual name. All you will see there is the total debtors, when you must have added all the people owing you. If Mr. A is owing you, Mr. B is owing you, Mr. C is owing you, Mr. D is owing you, Mr. E is owing you. Then when you add up all the amount these people are owing you, they will make up your total debtors. So the account which we open for them, which we call the total debtors control account, is the account showing your total debtors. And again, these debtors eventually will pay. When they begin to pay back, in control account, you will not see them as individuals that are paying back. Rather, you will see the amount, the total amount that have been received from your debtors. The same thing, your creditors, those whom you are owing, whom you are owing. So these people, you will record all of them and say, these are my total debtors. Then, by the end of the day, you begin to pay back. As you pay back, you now record the total amount you have paid back to your debtors, showing your the total amount paid to your debtors, and not the individuals you are paying to. So you now see the control account, what we call it the total account, because it shows the total of all the outstanding debtors you are having, and all the outstanding creditors that you are having. You see the total. So we call it total debtors or total creditor control account. It is also referred to as a summary account. It is also referred to as a what? A summary account. Just write down. Say it is also referred to as a summary account, which can be seen as a kind of trial balance. Which can be seen as a kind of trial balance. Well, when we begin to solve some questions, you will see how it is seen as a kind of trial balance to check the correctness of their balances. Whether the amount of credit, amount of the debtors you have balances with both the payments they have may just see the balances to see how they have balance. And actually in control account, what happens is this: somebody records the transaction. Somebody records the transaction. After recording the transaction, another person prepares the control account to check whether what the person who recorded the transaction did, whether it was correct. So to check the correctness of that recording, basically. So we say it is a kind of trial. It is a summary, and it is referred to a summary account, which is seen as a kind of trial balance for each ledger. I hope you are following. I don't know whether I'm fast, but in any case, I will reduce the tempo so that you follow effectively, because you only see me, you are seeing me on the screen, and you cannot just say osmosis, repeat. But in any case, where you do not understand very well, you just pause, replay that part, because I will take time to explain these things in detail. We said that control account is this part I am talking about, that it is a kind of it is a summary account, which is seen as a kind of a trial balance for each ledger. The control account is used mainly in manual accounting systems. The control account is used mainly in manual accounting system. I hope you are taking down. So the control account is used mainly in manual accounting system. So let me summarize what I have said so far. We have just defined control account, where I told you that control account is an account prepared to check the correctness of balances in the personal ledger of customers. And the customers here were referred to as the debtors and the creditors. And again, we said that it is also referred to as a total account because it shows the total of all the outstanding debtors. Even just the debtors you are having, all the debtors you are having, sum them together, write down all the amounts they are owing you, know the total. It shows you the total of all your outstanding debtors. And all the people you are owing, those people you are owing, write down all of them, get the amount. That amount you are owing them is the total amount you are owing your creditors. So, control account will reveal to you, will show you your total outstanding debtors and your total outstanding creditors. Those whom you are owing and those that are owing you. I said it is a summary account. So when you do that, you see you have just put everything in summary. A summary account, which is a type of a trial balance for each ledger where it is what required. So control account in part 1, most of the topics we treated here were all done. They have the double entry. In fact, we will describe it as a double entry system. But in this account 102, some of these topics here are not part of the double entry system, just like the control account. The control account is not part of the double entry system. Are you following? Then, apart from that, it is an account used in the manual accounting system. So today, you see that the manual accounting is no longer in vogue. If it is, just in very few small organizations. In big organizations, we will now have computerized accounting. And with the computerized accounting, you hardly see errors are rare. They are highly minimized. So it's a manual accounting system. It's an account used in the manual accounting system. So as somebody who is undergoing the training to become a certified accountant or an accounting graduate, there is every need, you know all this, both the computerized accounting system and the manual accounting system, so that whichever one that comes your way, you'll be able to look into it and report effectively. So we have seen the meaning of control account. So we shall now be looking at who prepares control account. So all the meaning, both just under the meaning of control account, you just call it, just write here 1. The definitions we have given and explained about control account, just write what? 1. Meaning of control account. Where you have written meaning of control account, just write 1. Then here, 2. Who prepares, you now say, who prepares control account? Who prepares control account, right? Who prepares control account? So, we shall be looking at this. There are basically 2 people, depending on organization. The control account. Well, let me tell you just give you a little highlight about it. I have said it earlier, but let me give you a little highlight about control account. You see, in most organizations, especially some relatively big organizations, they engage people whom we call ledger clerks. These ledger clerks prepare record this ledger, do recording on this ledger. A clerk may be in charge of the debtors ledger, and another one might be in charge of the creditors ledger. So, and we'll just call them ledger clerks. The ledger clerk will do this recording. As they do the recording by the end of the day, another person will have to prepare the control account to check the correctness of the recording done. The correctness of those recordings done. So one of such people will say, who prepares control account? One. Or you just say A. You have written who prepares control account, or custodians of control account, or custodians of control account. Now, if you have done that, we now say number one, who prepares control account, you have to write a senior account clerk. Just write senior account clerk. Senior account clerk. Senior account clerk. Or B, we say chief account clerk. A senior account clerk or chief account clerk. Now, in any organization, the senior account clerk or the chief account clerk prepares the control account to check the correctness of balances in the personal ledger of customers. So these are the people who prepare control accounts. Now, the third one we are moving into, so we have looked at the meaning of control account, who prepares control account. Let's look at number 3. This number 3, write importance of control account or uses of control account. Importance of control account or uses of control account. That is why the control account is being prepared. Right. Importance of control account or uses of control account. You can say why we prepare control account. Have you written? If you have done that, we say that control account is prepared. Right? That control account is prepared. 1. Is prepared to ensure, control account is prepared to ensure that errors are minimized in the book kept by the ledger clerk. So 1, control account is prepared, 1, to ensure that errors are minimized in the books kept by the ledger clerk. Like I had earlier told you, the ledger clerk prepares this account. When he finished preparing the account, a chief account clerk or senior account clerk prepares the control account to check the correctness of the recordings that have been made by the ledger clerk. So, the control account is prepared to ensure that errors are minimized in the account kept by the ledger clerk. 2. We say that it is prepared to prevent embezzlement of funds. It is prepared to prevent embezzlement of funds or to minimize fraud. The written 1, 2 says to prevent embezzlement of funds or to minimize fraud. If you have done that, then number 3, it is prepared to ensure segregation of duties. It is prepared to ensure that, you can put it this way, it is prepared to ensure that duties are segregated. It is prepared to ensure that duties are segregated. For example, if you live in a city or in the city where you have big supermarkets, sometimes it is not the person who issues you receipts for payment made. It is not the same person who receives money for that payment. I have a call to visit a supermarket where I made some purchases. It is not the person who gave me the receipt, received money, and at the same time who gave me the items purchased. So, you see a kind of control. All these things are geared, one, towards preventing embezzlement and fraud. So, and again, like I said in this first stage, so it is prepared to ensure that duties are segregated. That is, there is a kind of division of duties so that not the person who receives money when payment is made is the same person who issues receipt for the payment made. You see the kind of control from organizations put in place. Now, another importance of control account is that control account is prepared to ensure that we determine our debtors and our creditors. Or in other words, it is prepared to show at a glance all the outstanding debtors, right? It is prepared, that is number 4, or A, B, I think I wrote A here, D here. Okay, this is not in the importance of control account. Just be using either I, or A, B, or C. So the most important thing, you understand what I'm saying. So I'm in IV, that is the number 4. We say that control account here is prepared to show at a glance all the outstanding debtors and creditors a firm has. It is prepared to show at a glance all the outstanding debtors and creditors that a firm has. Have you done that? It is prepared to show at a glance all the outstanding debtors and creditors that a firm has. Another importance is that it facilitates. That is number 5, right? It facilitates the preparation of interim final accounts of a firm. It facilitates the preparation of interim final accounts of a firm. It facilitates the preparation of interim final accounts of a firm. By this, I mean, you see, by the end of the day, you see your total debtors, you see your total creditors. And when you are preparing final accounts of either a sole trader or a big organization, we say that control account helps in preparing interim final accounts. From there you can list your total debtors. From there you can list your total creditors. So you see one of the things is done in the preparation of the final account of a firm. So, having looked at the meaning of control account, custodians or who prepares control account, and the importance of control account, right? We shall now look at 4. The main account prepared in control account. Main account prepared in control account, a heading rather. Main account, right? A subheading. Main account prepared in control account. Have you done that? The two main accounts prepared in control account are sales ledger control account. The two accounts prepared in control account are sales ledger control account and purchases ledger control account. Sales ledger control account and purchases ledger control account. The sales ledger control account is to check the accuracy of total, because when you make sales, you have what? Debtors. When you make sales, you have what? Debtors. So the sales ledger control account is prepared to check the accuracy of the total debtors as it appears in the personal ledger of customers. As it appears in the personal ledger of customers. We say that sales ledger control account. The two accounts prepared in control account are: one, the sales ledger control account; two, the purchases ledger control account. You see, before you talk of this, why you say sales ledger control account? Control account, I said it is also referred to as total account. In that total account, you have total debtor. Total what? Debtor. Let me. We have what? Total debtor. We also have total creditors. We also have what? Total creditors. For you to have determine your total, for you to have debtors, you must have made sales, and the sales you make must be credit sales. And when you make credit sales, you have debtors. And when you make credit purchases, you have creditors. So here we have total debtors. So it is either we call it total debtors control account, it is either we have total debtors control account or total creditors control account. It is either we have total debtors control account. Just look at the board closely. Can you see it? Can you pick what is there on the board? Watch it closely. So it is either you have total debtors control account or total creditors control account. And for you to have debtors, you must make sales. And for you to have creditors, you must make purchases. That is why you see it sales ledger control account. So the two accounts prepared in control account are automatically, you have total debtors. Now say sales ledger control account. Here you have creditors. You now say purchases, because for you to have creditors, you need to make forward purchases, and purchases on credit for that matter. We have purchases ledger control account. So we talk of the sales ledger control account and the purchases ledger control account. And the sales ledger control account is prepared to check the accuracy of the total debtors as it appeared in the personal ledger of customers. Is to check the accuracy of the total debtors to know whether the amount for the total debtors recorded by the ledger clerk is the exact amount. So to check the amount, the accuracy of the total debtors as it appeared in the personal ledger of customers. So the same thing, the total creditors control account is also either total creditors control account or purchases ledger control account. These are the two accounts. So pick them closely, prepared. So the purchases ledger control account is also prepared to check the accuracy of the total creditors as it appeared in the personal ledger. As it appeared in the personal ledger of customers, just to check the accuracy of the total creditors as it appeared in the personal ledger of the customer. So these are the two accounts prepared in control account, the sales ledger control account and the purchases ledger control account, or the total debtors and the total creditors, whichever name you call them, they are the same. So if you have done that, we now go straight to the fifth point, the fifth subheading, which is content of control account. Content of control account. You see, the control account we can have a good number of the content. So, but the prominent among them, we shall just list. As other issues arise, we now look at the nature of the transaction and know whether we are going to debit it or whether we are going to do what? Credit it in the control account. Remember, the total debtors control account. When we treated in the double entry system, all our debtors have debit entry. All our debtors have what? Debit entry. While our creditors have credit entry. What I mean credit entry means all our debtors have debit balance, while all our creditors have credit balance. If this issue is confusing, please, I refer you to Osmosis Lecture Series, Account 101. Pick it, follow the lecture, and understand the principles of the double entry system. If you understand the principles of the double entry system very well, you are going to understand that the debtors, all our debtors have debit entry, while all our creditors have credit entry, or all our debtors have debit balance. That is balance brought down, debit. While all our creditors have credit balance, balance brought down on the credit side. The debtors on the debit side, while the creditors on the credit side. We use the T account. We shall use the T account to illustrate this here on the board. So write the fifth subheading: content of control account. Content of control account. Have you written content of control account? So the first account we shall be looking at is the sales ledger control account, or the total debtor control account. Just write. Have you written? We shall write sales ledger control account or total debtor control account. The sales ledger control account will contain on the debit side the totals of the following, as we shall list them on the board. Let us use the T account to illustrate. Yeah, let us use the C account. Sales ledger control account. Remember, this is the debit side, this is the what? Credit side. Remember, I had earlier told you that control account is not part of the double entry system. Are you getting me? But that does not mean the double entry system had not earlier taken place. But in this control account, we are only showing one part of it. The other side of it has earlier taken place somewhere. So, but here we are not treating the double entry system per se. So that is why we say it is not part of the double entry system. It is only present in the personal ledger of customers. Then in the ledger of customers, in the general ledger. Are you following? So we shall now look at the items that we have on the debit side of the control account and the items we have on the credit side of the control account. On the debit side of the control account, let's take it this way. Now, you see, after you have recorded all your debtors, by the end of the month, you carry them down. At the beginning of any month, you will say balance brought down, because you are no longer writing the names of your debtors. It's just the total balance of your debtors. By the end of the month, it becomes your opening balance. So we say balance that is opening balance. Opening balance, right? Opening balance, or rather call it opening debit balance, so that you now know opening debit balance. Here we use the Naira sign. Here you use the Naira sign because we are in Nigeria and our currency is Naira. So I use this asterisk sign to show the amount. Opening debit balance. Now, this will have the opening debit balance. That is the amount of your debtors. Are you following? Please. I don't know if you are following, but let me believe that you are following effectively. Now, if you have your debtors, what do you think will make your debtors to increase? That is the number of people owing you, or the amount they are owing you to increase. Anything that will make them increase is you making more sales on credit. So that is to say, anything that will make them make your debtors to increase is sales made during the period on credit, or you call it sales made during the period, or you say credit sales. Credit sales. So if you make more credit sales, automatically your debtors will do increase. Just see that you as a business person, that you make, some people are owing you. You now make more sales on credit. As you make more sales on credit, automatically you see your debtors will do increase. Without being told, your debtors will do increase. Are you following? Now let us consider some items that will be on the credit side. You see, sometimes we'll have opening credit balance, if any. Here, opening credit balance. So under this opening credit balance, we just say in brackets, if any. Sometimes it does happen. But I will explain all these things to you so that you understand what the rule of the game is all about. So we'll talk of opening debit balance. More credit sales, your debtors are already increasing. Here we have opening credit balance. a situation where you have your debtors are owing you and you are somehow owing them. You have an opening credit balance. Are you following? Now, apart from that, another thing that these debtors will definitely pay, and since they will definitely what pay, you have they may pay you in cash, or they may pay you by what? Check. So we now say cash and check received from customers. You can write cash and check received from customers or debtors. Cash and check. So here you write cash and check received. Cash and check received from debtors. Just say debtors so that you know what you are doing. Cash and check received from debtors. Now let me tell you one good thing. I want to know about this thing so that you use your brain anytime you want to use your brain. Are you following? Use your brain very well. Now, if your debtors pay you, please, I want you to pay attention. Just pay attention so that you understand this concept very well. There's no way you cannot understand it. It's as simple as that. If your debtors pay you, because they pay on time, you give them what? Discount. If you wish to. You do what? You give them discount. We have two types of discounts. We have the trade discount and the cash discount. Trade discount is as a result of bulk purchase. Bulk was purchase. We give trade discount. While cash discount is as a result of prompt payment. Prompt was payment. If your customer pays on time, you may say because you pay on time, I am giving you what? Discount. And so we say we have the trade discount and the what? Cash discount. Under the cash discount, which is the discount we are considering here, the cash discount is divided into two. The discount received as a result of purchases, and discount allowed you give to your customers as a result of sales. So here we are making sales. We make sales. Our customers pay us, the debtors. When they pay, we may decide to give them discount, which is discount allowed. You are giving out discount to your customers, your debtors, who have paid you. I hope you are following. So if you are following, then we now say you allow them what? Discount. So if you allow them discount, if they pay you automatically, it reduces the debt they are owing you. And if you allow them discount, which means the debt they are owing you is also being what? Reduced. So it's going to be credited to reduce the debt on the debit side that your customers are what? Owing you. So we say discount allowed to debtor. Right on the credit side, discount allowed. Discount allowed. To debtor. Discount allowed to debtor. So if you allow your debtors discounts, as you can see it works very close, we have your opening credit balance, if any, are indicated there. Here we have cash and check received from debtors. That is to say your debtors have paid you, but they have not made full payment. So the amount you receive from them, you have to credit it so that it reduces the discount allowed towards debtors is also on this side. I am going to make a little explanation how these things come to be. But let me finish what I am doing. Then I will now take a little time to do a little analysis before we go into some solving. So another thing that you will see on this side is return inward. Right, return inward. Return inward. Return inward. You see, when you make sales to your customers, when they go home, if what you have sold to them, if some of them are wrong specifications, they will have to return it back to you, and this is called return inward. And when they return it back to you, automatically it reduces the debt they are owing. So we say return inward, also reduce the debt. Another thing that can reduce the debt is bills receivable. Though more technical for you to understand, just write bills. When we begin to do, I will begin to do what? Analyze these things one after the other. We say bills receivable. Another thing you put down here is bad debt written off. Bad debt written off. Another thing you will see here is transfers. Transfers or set off. Set off. Transfers or set off. Another items as they appear will just have to explain and know where they belong to and just put them there. Now, if you look on this side, there are other items that may appear here or that could appear here. You see, when you receive cash and check, especially check from your debtors, and you take it to the bank, present it for payment, eventually some of these checks may be dishonored. And when they are dishonored, what do? You return it back. And for you to return it back, you have to what? Debit your customer. So on this side, you now say dishonored what? Check. Dishonored check or checks. That is some of the checks they have paid you, giving you here. When you take it to the bank, if it is dishonored, you return it back, and this will increase their debt again by that amount. I hope you are following. So another thing again that you can see there is when you say cash paid to debtors and transfers. There could be transfers as well. Cash paid to debtors as a result of one return or the other. You pay them what? Cash. Yeah, cash paid to what? Debtors. This cash paid to debtors may be in one form of don't call it, will I say loan or a facility, but this is a cash and a money given to the what? Debtors for one business deal or the other, which actually they are owing you for it. They are what? Owing you what? For it. So it increases the amount of debt they are doing what? Owing you. This one is if any of them, you now include them. Here you also have transfers or set off. Or what? Set off. So these are the items. So when you bring them down, you now know your balance, and so these are the items, possible items that could appear on the sales ledger control account and to appear under the sales ledger control account. Now let me do that little analysis here for you to appreciate what we have done so far. You can pause, take your time to copy down these things. Now, when you see, look at the two opening debit balance. You what? Opening debit balance. Like I tell you, all debtors have what? Debit balance. If you make credit sales, it will increase. This is dishonored check. This is cash paid to debtor. This is transfer. This is opening credit balance, if any. Cash and check received. Now, remember that, for instance, here, cash and check received from debtor. If you receive cash and check from them, in your cash book you have already debited your cash book. This is the account of your debtor. The account of your what? Debtor. And in this account, if your debtor is giving out, it shows that your debtor is what? Giving out. And since your debtor is giving out, what do? You debit your debt, you credit your debtor as the giver. So here, your debtor is just giving out, because you have recorded in your own account. If it is cash and check received, you have recorded in your own account. Discounts allowed, you have recorded in your discounts allowed, debited your discounts allowed account, because these discounts are just like an expense. Considered an expense or loss you have what made. The return inward, you have debited your return inward account. Dues receivable account. Bad debt written off. You see, bad debt written is just like a loss, and you have debited it already. These are transfers or setups. So when you have done that, so you see the corresponding. This is here we have the corresponding credit, because the other one is not shown here. So we did not show where the other one happens here. And although it's not part of the double entry system, so that is why you did not see the two sides of the account. You know, in the double entry system, you know that in the double entry system, you have to show the two sides. But here, you just see only one side of each shown. So we say that the control account is not part of the double entry system. So we shall look at the other side of the other aspect of the control account, which is the purchases ledger control account. We have looked at the content of the sales ledger control account. We shall be looking at the content of the purchases ledger control account. So I want you to listen very carefully and follow effectively as we go to the purchases ledger control account. So, we wipe out here, or we just say, remove this, and here we'll write purchases ledger control account. Under the sales ledger control account, we say we have earlier noted that when we make sales, we have debtors. But when we make purchases, we have what? Creditors. And our creditors have credit balance. Our creditors have what? Credit balance. So here, we are going to have opening credit balance. We are going to have what? Opening credit balance. Because our creditors have credit balance, we shall have opening credit balance. Then, if we want to increase our creditors, people whom we are owing, we need to make more purchases. We call it credit purchases. We call it credit purchases. When you make credit purchases, you have credit purchases will increase your creditors. So you see here, we have opening credit balance. You make more credit purchases, it increases your what? Creditors. Another thing that can increase your creditors is what? Transfers or settles. Now, and any other item that may arise that may increase your creditors or the amount you are owing to other people. Now, here we have opening debit balance, if any. Remember, the main thing here is that creditor and purchase ledger will make you have what? Creditors, and creditors have credit balance. And for you to increase your creditors, you make more credit purchases, you have setup. Then, apart from opening debit balance, if any, we'll have cash and check paid to creditors. Cash and check paid towards creditors. If you pay cash and checks to creditors, they may allow you what? Discount. So we say it is discount received. They may give you discount. So we call it what? Discount received. And this thing here automatically reduces the amount you are owing. Then another thing here that may appear here is what? Return outward. Return outward. Return outward. This thing, as you return back to your creditors, it reduces the debt you are owing them. Then another thing also that may appear here to reduce the debt you are owing your creditors. Debit side. Another thing that may appear on the debit side is bills payable. The other side will say bills receivable. Bills what? Payable. And transfers. There are other items that may appear there as they arise. We'll look at them and know where they are supposed to be and put them there. So these are the items we can see on the both the debit and the credit side of the purchases ledger control account. These are their contents. So I want you to look very closely to the board and take them down so that as we begin to solve practical problems that affect both the sales ledger control account and the purchases ledger control account, you'll be able to follow effectively like I earlier said in this lecture. So we shall be moving to the next stage, which is the sixth subheading titled Sources of Information for the Preparation of Control Account. Sources of Information, write the sixth subheading. The sixth subheading. Sources of Information for the Preparation of Control Account. Sources of Information for the Preparation of Control Account, the sixth subheading. Sources of Information for the Preparation of Control Account. A. Purchases ledger. A. Purchases ledger. Have you taken down? B. Sales ledger. Taken? C. Debtors account. I say debtors account. D. Creditors account. Taken? E. Return inwards account. Return inwards account. F, return outwards account. Then G, cash book. I say G, cash book. So we have seen the sources of information for the preparation of control accounts. These are the sources of information. But if when the chief account clerk or the senior account clerk wants to prepare the control account, there are some implicit information that he needs to prepare the control account. This implicit information will come from the source document so that he will get the original source for the information he wants to prepare. I don't know if you understand what I'm saying. So write the seventh subheading. The seventh subheading. Sources of, or write the seventh subheading this way. Information that would help the chief account clerk. Information that would help the chief account clerk or senior account clerk prepare control account. Information that will help the chief account clerk or senior account clerk prepare the control account. That would help him. Apart from the sources of the information, we also talk of the information that would help the chief account clerk or the senior account clerk prepare the control account. One of those information includes, some of those information includes A, purchases / credit invoices. Purchases / credit invoices. Again, purchases / credit invoices. Sales / credit invoices. We see we are talking of invoice now. The original source of the document with which the ledger clerk used in recording the information or the data he needs. We say the purchases / credit invoices, the sales / credit invoices. 3, cash payment to creditors. Cash payment to creditors. Cash payment to creditors. 4, cash receipt from creditors. Cash receipt from creditors. So we have seen information that would help the senior account clerk or the chief account clerk prepare control account.